All right. Good morning, everybody. Still have a cold, so I still sound rough, but just work with me. All right. As anticipated, we're still holding the line. Didn't really advance yet this week. It's very likely we're going to chop about at least for the rest of the week, possibly two. Iron condors, maybe even some butterflies, depend on key levels, is still the baseline bet. Some call credit spreads. But look, any kind of vol selling in this environment is crazy dangerous. So you want to go out in time. Don't run anything short duration. It'll still decay, in that week or so. And really, I think it's just better off with the limited engagement on that side. Japan is flat. Or really, we could just start with Hong Kong down 1.5. Europe around 0.5%, and then the rest of ours closer to flat. The Russell is down the most, the small caps, looking for any kind of short covering rally or short squeeze, shorts covering. We're certainly not seeing it, at least not yet. It's going to be more Fed speak. The overall environment right now seems to be that they're looking for the Fed to finally announce that pause, while at the same time, if the Fed does pause, they're screwed, right? If they actually announce that pause. And so there's been a lot of Fed speakers saying we can't cut, we can't stop raising rates. We need to raise it again. We got to stay on top of it. And the market's not hearing it. So a little bit of a disconnect between what the Fed is saying and what the markets are pricing in. It's like they think they have the Fed trapped and there's no choice except to continue with this pause. So maybe unrealistic expectations out of the market. If this comes to a head, then we're likely to see the market begin to reprice high for longer, maybe even higher for longer. That's going to put us back down again. We got a couple of big Fed speakers. You can see highlighted in the dark red. And then some other Fed speakers who aren't listed so high up in the impact rating. We got Bank of Canada and some additional auctions through the lunchtime. It's going to be a full house, lots of Fed speakers today. So really, this is the biggest thing at the moment is the market pricing in or pulling forward this idea of a pause and or eventual cuts. If they have to start unwinding that and pushing it back out, then this exuberant explosion that we started last week is going to get unwound. There's the SPX and ES spot gamma levels. if you want to catch a screenshot. Once we take out all those Fed speakers, this is really what's left on the table. So 8:30, 11, and 1 o'clock are the key times today outside of those Fed speakers. Now we are above the zero gamma and the volatility triggers. We're still underneath that call wall, which they rolled up. We're above the 10-week. And we tagged that daily pivot point yesterday. So we're no longer carrying forward missed daily pivots. And we've already hit the daily pivot for today as well. And now we're underneath instead of being on top. The volume's a little better than yesterday, still a little light, not enough to be concerning. It makes sense. You know, we haven't really got a whole lot going on. And so we're seeing that coming through in the volume. Just keep in mind that low volume can equal fast, big moves in price. We've still got a considerable distance between us and the weekly pivot point, kind of holding that level that we got from yesterday. This is about as extended as we want to get when it comes to how far away from a weekly pivot. So we're really not expecting this range to increase. The idea that we could break out of last week's high and continue to go up, I mean, sure, it's possible, but it would take a pretty sizable catalyst at this point to propel us up through that weekly pivot point of last week's high and then continue to expand farther away from this weekly pivot point. So I just don't see it with the data that we have on deck today. Some kind of news could come out. One of those Fed speakers could say something that really kicks the market into gear. It's always possible, but baseline bet, we're not going to cut through the previous week's high and head higher. Not yet. We got to very likely digest where we are at after that big 6% move that we had last week and let this weekly pivot point have another week to get closer to us. Kind of lets the market rebalance that really big move. And if you look at it on the weekly, I mean, that was a really big move. If we do overshoot last week's high, we can see these two wicks back here on the idea that there's very likely some large sellers still sitting there and that they're not done yet. They're going to take the opportunity to sell some more. You could line it up with the 20-week moving average and just say it's very unlikely that we're going to get through that. That would be the 20 SMA. We're already above the 20 EMA. On the other side, though, any kind of downward move, we're still going to expect 50% of last week's range to be the line in the sand. We're not looking for a bearish market necessarily, just one that's still digesting this move. So we could fade down into the 42.67 area, but we're still expected to close above that. Ten-day, 30-minute volume profile. When we're at the lows, we expect to go to the highs. When we're at the highs, we expect to go to the lows. We do have a real shallow area underneath us, and this makes sense because we moved through that area really fast. We didn't leave much of a footprint behind. And so if we do break yesterday's low, we're very likely going to just drop right through that entire zone back into the 4268, 4270 area. We don't really have a classic profile here, but we do have the point of control at our location already. Now, we have spent some time there, to be fair, so we can see that we're building out time, but we haven't spent the most time there. We spent the most time down here. That's why the point of control on the TPO is still at 4180, because of all this time that we spent down here. The thing is, that's the key, right? We spent Thursday, Friday, Monday, Tuesday, and Wednesday down here. That's an entire trading week. It's 5 days. We've spent Friday, Monday, and just a little bit of Tuesday at our new location, and we've got so much volume there that that's now the point of control. That's a significant amount of volume. It's why we put TPO on one side of the chart and the volume profile on the other side of the chart, so that we can see volume by time and volume by price. So while we haven't spent a significant level of time at this location, it is where we've had the most volume. That could be from a ceiling that we ran up into a massive level of volume. It could be trader repositioning, right? We don't have to read into it and see it as a negative or a positive. We can just read into it and just recognize the fact that it is the greatest amount of volume in the 10-day period is all right there. And it happened in 2.5 days. So we're very likely going to continue to digest at this level. And that when we do pull away from it, it's very likely going to be violent, either to the upside or the downside. Expect as well, because liquidity resides on the other side of the pivot, that as we continue to tap the edges to the upside and the downside here, we're going to expand that range a little bit at a time. That's why the megaphone pattern exists, right? We'll continue to push the edges higher and lower until finally something breaks. We have a new VPOC from yesterday. $43.82. So if we do cut to the upside today, it looks really close to yesterday's RTH open, really. So honestly, you almost don't even need to carry forward the VPOC. You can just carry forward yesterday's market open, RTH open. It's nearly perfect. Otherwise, the baseline bet is that we're going to hold the line here and let this week digest all of this while the Fed is out chipping teeth, trying to get on the same page and sing from the same book. So we are coming back down towards that 10 a little bit, but it also gives the 10 time to come up to us. So a little bit of a, both sides got work to do. That's the 10 week. And we're 1.4, call it 1.5% above the 10-day. Now we've been higher than that. We're kind of coming back towards the 10-day. We're also giving the 10-day time to get caught up with us. And so it helps complete this wave and carries the narrative. Still, it kind of reinforces the expectation that we're not really expecting an advance at this point. It doesn't mean we're going to decline, just we're not looking to see that advance, that breakout above last week's high. That's still off the table without a catalyst or some sort of news to get us through it. So it looks like the NASDAQ's trying to regain control and take the lead this morning. It's nicely above VWAP, retesting or at least working towards getting back to the Globex high, while the ES is still struggling with just getting a candle close through the VWAP onto the top side. US dollar Japan's got this nice little scoop pattern. It finally got through that big drop from last week. And that's a little bit of a concern because we were using that big drop as a part of a liquidity gap. So this move back up was kind of viewed as, yeah, well, we're just resetting the gap. It's not that bad. It's not that big of a deal. But we reset the gap and we kept right on going. Now we're looking at US dollar Japan above 150.5. That puts us into danger for intervention with US dollar Japan and BOJ. So last week we got higher than this. We were at 151.75 or pretty close to it. Right? That's an extraordinary level of danger. If they do come in and intervene, the move to the upside in the S&P, if it works out like it did last time, is going to be very swift and very violent. We moved about 1.5% in 60 minutes. It's a massive move, just unbelievably fast. And then over the period of the next few days, we went another 6%. Remember last week we moved 6%. So that's what a 6% move is going to feel like again. We'll get another one of those. Now, last year when US dollar Japan, when Bank of Japan intervened, it was unprecedented, right? It's not like they do it all willy-nilly whenever they want to. There's a history on how often they've done it in the past. I don't have my notes on here. There's not a whole lot, right? We're talking, one hand, you could count the number of times they've done that intervention. So October 21st, 2022, that was the Friday. And then they came back in on Monday and did even more work. And they spent truckloads of money to do it. So it's a big deal. And if you want to go back to October 21st of last year and then October 23rd, that following Monday and the week after that Monday, looking at the SPY and kind of getting an idea of what's on the table, what kind of moves we could see if we get this intervention, is that's what's going to give you the most insight, right? Is taking a look at what we've done before. Either way, this is at a pretty high threat level, just sitting above that 150 again, even rising in this condition, right? Because this is it just looks bullish. It is bullish. If this was stock, we'd be all over it, right? Now, with the 10-year from Japan looking a little soft this morning, this is one thing we've got going for us. So this is going to be the thing you really want to keep your eye on. US dollar Japan by itself might continue to rise up. And yes, that's a threat we just covered. But I think the key ingredient is this, the 10-year out of Japan. So as long as this stays down or stays flat, doesn't continue to rise, should be okay. Wouldn't expect that intervention yet. We see this starting to take off to the upside, get back above, 0.96 or so, right up into this threat level across the highs. That intervention becomes even more of a threat. All right. Some of the things that are going to take a move to the downside with US dollar Japan rising up is precious metals. So this weakness in gold and silver, you can see how low we are. We're at 2063 this morning. After how we had closed down on the day yesterday, we're opening way down here. As US dollar Japan rises, silver and gold miners, they're going to continue to take that hit. If we get that intervention and US dollar Japan begins to fall, then these things are going to push hard to the upside. Nat gas continues to fail on that breakout. So we've talked about this breakout in nat gas, this wedge that it had been building way down here. So there was our breakout that we were so excited and happy about. But every time we've gotten up into that high, it just gets sold off. We don't know if that big seller is done yet, but so far, no indication that they're done. We are continuing to hold above the 50% mark, but I mean, that's not going to carry us forever. And Bitcoin's still digesting that really big move. I mean, we got up to 36K. That's impressive. And it was fast. So it makes sense that we're just going to kind of chew on it for a little bit. We got a bull pennant. It's a little different than a bull flag, but not really, not too much in the grand scheme of things. Just keep in mind, it would be healthier to see this pull back a little bit. 34, 33 and a half. That wouldn't hurt my feelings at all. And we're not seeing the proxies with it that we would have expected. If you're taking a look at things like Riot, Mara, Coin, Hut, Hive, they're not really appreciating this move as much as we would have believed it would, right? It didn't have that follow through effect. And oil just straight fell out of bed yesterday. So we are on that 50% mark. We're at the half back now. So we're getting a really good setup for a half back break or a half back rejection. If it's a half back rejection, we're going to bounce this level and begin working our way back up. If it's a half back break, then we're going to break this level and we'll target 25%, the next zone down. I thought, wait. If we do get that move to the downside in US dollar Japan, we're going to expect things like FXY to pop and head to the upside. Give you a chance to trade in this without having a Forex account, right? And then, of course, you can trade something like depending on who's your futures broker, there's M6, but this is not a very liquid product. So, when you go in and you're trying to figure out, what you're going to trade with it, you're basically making book here. I know in the Apex accounts, you have the data to trade this. So you do have access to these currency markets. I think it would be something like 6C is what you would type into your Tradeovate account. It may not be C. Maybe it's 6E. I don't remember. You have to look. Hit me up later if you can't find it. I'll pull it up. %13 of the S&P is down 0.5%. 3% of the S&P is up 0.5%, and one of those is Microsoft. Microsoft is just a beast. 13% of the NASDAQ is down at least 0.5%. And 9% of the NASDAQ is up 0.5%. And that does have Microsoft in it again, and Intel, no less. So I'm going to change the filter here in a second, but our benchmark when I do the morning briefing is 0.5%. If the market hasn't moved at least 0.5% up or down, then I don't consider it having moved enough to even warrant my attention. I know some analysts that use 1%, not 0.5%, and that just narrows the focus more, right? So kind of the idea that with my 0.5%, we may end up with 30 things to look at. But with a 1% as the benchmark, you can narrow that 30 names down to like 3 or 5 things. And so it's a great filter to kind of hone you into a specific area. But on a day like this, when everything on a week like this, where everything really just isn't doing much, that 1% would eliminate everything. There wouldn't be anything to look at all. The heat map that we're looking at right now, its default position is 0.5%. So if something has moved more than 0.5%, it will get some color to it, green or red. Otherwise, it just has that gray background. And so it makes it really easy at a snap glance to see what's happening out there. And when I first started trading and I seen a heat map, I thought, what a joke. Honestly, I got to say, I had absolutely no respect for a heat map at all when I started. But that's really short-sighted, and I gotta say, over the years, I've changed my point of view radically. Heat maps are fantastic. They're a really quick way to take in a ton of information. We're looking at the NASDAQ 100 here. We got 100 names that we're looking at. And at a glance, we know exactly what's going on out there. We don't have to stare at it very hard, right? Just kind of just casually glance at it. You've got a really good idea what's going on. Maybe I'm just a little old too, but squinting at watch lists through the day, as opposed to looking at this big fat graph right in my face, it's a whole lot easier to see. So just kind of throwing it out there. If you don't use any heat map at all through the entire trading day, reconsider. Just add one. See if it helps you at all, even a little bit. Thinkorswim's got it. TradingView, FinViz. I mean, they're all over the place, right? And they're all over the place for a reason. Now I'm going to put the filter in place, and we just get different levels of heat, right? Brighter red, brighter green, darker green. And we still get the gray. Now, the size of the boxes are a clue, right? They're representing market cap. So the bigger the box, the more market cap that company has, which makes it really easy to see the FANG names because they're the biggest boxes. Google, Microsoft, Meta, Apple, NVIDIA, Amazon, Tesla. Now, Costco was in the news. Charlie Munger, you know, from like Munger and Buffett and all the old timers. One of the old timers was talking about Costco and says he absolutely loves it. I haven't had a chance to hear it yet, but I heard about it. Some of the moves that we're looking at here, like Vertex, is just a little bit of a reflex back in the other direction. So here I've just loaded the NASDAQ 100, and we're looking at what's moving out there. Datadog fits that bill. Yeah, I'd say that made a pretty good move from 80 to 100, which is funny because that's the phrase, right? If 80, then 100. Now, it is earnings. So, you know, it's very likely going to be up, down, violent, all over the place. Just putting it in on a daily chart and a weekly to get some kind of perspective here. This has been a high flyer before that dumped right back down again. We're talking about, you know, 2022 sitting at $200, 2023 sitting at 60. So don't let this little bit of fan love distract from the fact that this thing has serious problems. So pretty decent push so far. They're definitely getting some flows. Could be worth looking into, you know, for an opportunity if those flows persist through the day. But I wouldn't try to pile into this thing at the open. I'd give it a little bit of time and let it kind of play out. Keep in mind too, these higher time frames, if we do continue to drive higher, let's just kind of lay out that restrictive point of where this should start to digest even in a move higher, if it even continues to go up. I'd say that if 80, then 100 holds. 98, call it 99 is the target with an overshoot into 100. And we could, you know, get right up into that wick, but not expecting it to hold. So if we drove higher, and you can see how it's bouncing all over the place, it's just kind of bebopping because it's earnings, right? It's just what it does. But if we do continue that drive higher, there's no expectation that we're actually going to close above 100 by the end of the week. So I'd really keep that in mind. And I continue to keep my eye on PayPal. I haven't had the time yet to really do a deep dive in this, and it has been a turd for a long time. I mean, believe me, I get it. There's a lot here that would make people be leery, but there's something up with this company, and I'm not done with it yet. If we're looking, you know, about the changing narrative and a company that can dig itself back out of the ashes, this is a really great app, great product. And I don't know. I think there's something here. But they just continue to sink lower and lower and lower and lower and lower. What I have been kind of thinking about on this is the narratives would change, right? They'd get a maybe buy a company or two. They would swap CEOs, maybe change out some members in the group. They'd have some publications about how they're integrating AI into their services. And it would just be this transformation, right? Like the phoenix coming up out of the ashes. So far, none of that, right? I'm not promoting piling into this thing at all yet. Just for companies that have the potential for a turnaround story, it would be PayPal. I'm hoping to get more familiar with this company over the next month, but I mean, so far I haven't had a chance to even look at its earnings, let alone dig deeper. So far, NVIDIA has kept that inside week breakout, had a nice expansion yesterday above Friday's levels, and it kept it really closing in the, in the upper portion of the candle, but we are kind of fading down this morning a little bit. I wouldn't get too, hung up on it yet. But we want to focus on 50%, right? So kind of use that as a gauge. NVIDIA can get a little weak this morning. It's not too big of a deal. And it can even get below that 50% level, but we don't want it to continue to go lower. It can kind of overshoot, wick through it a little bit, needs to get back above that 50%, needs to hold it. Now, NVIDIA isn't any special character. It's like the S&P, the NASDAQ, and everything else. So we've been talking about how we had a really big move last week, and we're looking for the market to digest. Well, a lot of the FANG names didn't get that report, I guess, because they just kept it expanding yesterday. NVIDIA, Apple, same thing, nice expansion. Microsoft, same thing, and it's still going this morning, right? These guys didn't get the message that, hey, we've already made a big move. Let's call timeout and just kind of chew it up a little bit, finish what's on our plate before going back for more. They're not done. But that kind of starts to put us in a blow off top scenario, right? So if they do keep going, it's going to get into that hoorah phase, and we're very likely going to get one more push sold to you, and then down we go for a pullback, not, like revisiting these lows kind of things. Now, Tesla, on the other hand, is down. Closed down yesterday, but I do have to say it closed up off of the lows. It set some pretty low levels. And it didn't rally back up higher than that 50% mark, but it did rally up off of the lows that it set. Now, this morning, we're down again. And kind of just play it out, right? Nice turn here. We closed bullish, stuck underneath the 50%. We gapped up, closed the gap, closed high on the day. Big, massive gap up, a little bit of a fade, closed at the high, really bullish still. That put us right into these wicks. Big gap up again. That's your fake break. Still managed to close higher than the previous close. Then another big gap up, another retest, more wick work across the top, all that trash. And that move down, and then worked its way back up off of that low. So higher open, higher open, higher open, higher open, and then today, lower open. That's different. It's the first time in what, 4 days that we've had this lower open. It's different. We're gapping down instead of gapping up. I don't know what necessarily we want to do with it yet. Just definitely wanted to point out that, hey, this isn't the same thing as what we've been getting over the last few days. It's a little bit different. And sure, it had news this morning too, right? I mean, it has news every morning. But now the 50% mark is over our head rather than underneath us. And this fits the bill for everything else that we were talking about with SPY and the cues that we made a big move. We need to digest it. And that's what we're seeing here. But it needs to keep it, right? So what we're concerned with is this gap down here. We don't want to see it come down and try to close this gap. So I would focus on yesterday's close. Maybe we could rally up a little bit, head our head on that, and then continue the move to the downside. Otherwise, 215, nice round number. Yesterday's low. Let's get through that, and we'll focus on the open of Thursday. If we get through that, then the low of Thursday, and then get this gap closed down here at that 206. If we put this whole thing on measure, the half back for this move is 210. Measure this whole move, the half back is 212. I didn't really like how Amazon closed yesterday, but you got to admit it had a pretty nice day compared to something like Tesla. So line in the sand is 139.55 on Amazon. We can come down and tag that. We can even wick through it, but we really don't want to get below that level too much. Kind of put it on a weekly though, get a little better perspective, just like with the rest of the indexes and everything else that we've been looking at, right? The half point for that big move that we had last week, 134. And now that we're out here on the weekly as well on Amazon, you can see it, all that selling pressure up here. So even if we do try to continue to go up, we're getting right into it. And we don't know if these sellers are done yet. Snow made some pretty good moves. We closed down here at 144. We're sitting at 153 this morning, up 6.6%. Snow is a part of the FANGs now, right? It's in the NY FANG index, that and AMD. We're above the halfway point, so that's going to be our line in the sand for a little bit of a support, 152.42. If we open and start to fade a little bit, that's where we want to see it catch support. Watch the flows in this. I think snow's got the potential to be one of those big movers today. If we get enough volume in this thing, it could just be the ripper. I mean, it's not fantastic options. We've seen worse. The December 15 has some nice volume to it. We got a really good profile here. But it's $5 wide and $10 on the bid ask. So not fantastic, especially for a $140 company. Got a market maker move of $6. And we've got a fast beta of $1.56 of 1.56%. I can live with that. I wouldn't expect this to get past 160 today. So if you do get a chance to take a drive on this, I would use 160 as my line in the sand. You could get a little overshoot, but I don't think it'd keep it, right? That's kind of the main thing. I don't think we close above that 160 level. I've been wrong before, so don't take it to the bank. Sometimes these drives, they just don't stop, right? They just keep going and going like a freaking Energizer bunny. So things that are getting whacked, nat gas, gold, energy, Bitcoin, emerging markets, more energy, more Bitcoin, China stuff, which is basically emerging markets. I still don't like the fact that they can even qualify as emerging markets. Whatever. And things that are up, really nothing is hitting my benchmark if we're just looking at it from a sector point of view. Pot stocks down almost 3%. All right, so this is a little homemade ETF. It's got Google, Apple, Amazon, Microsoft, Tesla, Meta, AMD, Snow, NVIDIA, Netflix, all of those wrapped up into this one market symbol. It's like a homemade FANG index. And they're up this morning. But everything that we have normally been looking at, the Bitcoin proxies, the China ADRs, pot stocks, we don't have any of that stuff today, but we got the FANGs. So, can the market rally with just the FANGs? Oh, yeah. Yeah, we've seen that happen before. But Not if the rest of the market is going down. If the rest of the market's kind of sideways and they're just really not helping, the fangs can do all the heavy lifting. But if the rest of the markets are actually going down, the fangs can't really carry the market higher. They can hold us up, but hard to see a path forward unless we get that rising tide. So, you know, not much of a surprise that the fangs are carrying us this morning, but you do want to focus on that rising tide. Keep your eye on all the other sectors. They need to at least quit falling at the bare minimum. So US dollar Japan. Keep your eye on the Dixie, the DXY. We're getting back up above that 105 half this morning. So that's really important. We needed underneath that for the rally that we had last week, and we got it. But if we can't stay underneath that level, we're not going to continue to rally. It kind of fits the narrative of us pausing this week and not continuing to advance. That dollar's another check mark on that box that says we're not going to rally this week. But we don't need the dollar to get out of control either. And we're coming up on a key level. It's the start of the liquidity candle, right? That gap, liquidity gap, 105.85. Let's see what happens when we get there. We don't want to close above that level today. The bonds are holding up relatively well, all things considered. So that needs to keep. We don't want to break yesterday's low. Right now we got, quote, stocks and bonds up. So let's keep that dynamic. If it starts to shift and we start losing one side or the other, then circle back to the 10-year and see what we got going on over there, which is down this morning, right? We're seeing our first print. The TNX down. We can look at the 10-year futures. They're at VWAP, a little less. And then just watch the news. Got a lot of Fed speakers out there chipping teeth. Be careful, be safe. I'll see y'all tomorrow.